Welcome to Speed Peace Academy. Okay, this is how I was able to catch this trade on US 30 that gave me 1:23 reward ratio. So this is the trade here, and I'm going to give you a step-by-step analysis on how I was able to catch out this trade using Tony Iyke strategy. So you have to pay very careful attention. One thing about trading is that you don't have to jump from one strategy to another. When you see a proven strategy, just stick to it and find out how it works. If you are not getting it right, it simply means you are doing something wrong, and your ability to spot out what you are doing wrong is very, very essential in trading. So I'm going to show you the before of this trade and how it is now. So this is a trade, and it's just a very simple strategy that if you stick to it, it works very, 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 very well. Very, very well. I mean very, very well. So you can backtest. You can go to your chart, backtest, check what has happened some months ago or some years ago, and then you will see. Just take your time. If you want to master any strategy fast, you just have to backtest. Choose a time frame that you want to work on, and then you backtest on it. Just backtest and see if this thing really work out or not. So it's very, very important, and I want you to begin your forex journey with me. If you are maybe have been in the industry for a very long time, or you are just starting your forex journey, just stick to this channel, and I promise you that before 1 year, before 1 year, brother, you are going to get everything right. All right. So let me just go back to the business of the day. This is how I was able to spot this US 30 setup that gave me 1:23 reward ratio. Before that, let me show you the trade on MetaTrader 5. The trade is still on. The trade is still on. It's still running. Okay. This is the trade on MetaTrader 5. So this is the trade that is currently on, and is almost at my TP. So this is a trade on US 30. This is a trade on US 30. So US 30 now, if you observe very well, you discover that market structure shift have already occurred, and then the trade is in an uptrend. So that is why I am buying. All right. So this is the trade. I'm going to show you how I was able to catch this trade. All right. I'm going to show you every step that I used to get this trade. So let me go back to trading view and explain how I was able to catch this trade. All right. So first of all, you need to know the direction of the market, which is directional bias. So that is the first thing I do when I open my chart and I want to begin any analysis. The first thing I do is to know the direction of the market. When you know the direction of the market, then you now trade alongside with the direction of the market. You don't just start buying when the direction of the market is selling or is in downtrend. No, you don't just jump into the market. So let me give you a step-by-step breakdown on how to carry out your analysis. So when you open your chart, the first thing to do is to know the direction of the market, which is directional bias. Please don't forget this. Directional bias is the first thing that you will do when you want to start your analysis. So this strategy is all about market structure, liquidity, and point of interest, including directional bias, because with market getting the right market structure, getting the right liquidity, getting the right point of interest without a correct directional bias, you will still miss trade, you will still hit SL. So this is it. So before I do anything, I have to switch to my daily time frame or my 4 hour time frame to know the direction of the market. So on a daily time frame, you can see this is it. On a daily time frame, market was in a downtrend. Market was originally on a downtrend. So you can see market was in a downtrend. It's very clear. It's obvious that market was in a downtrend. Market was trending down with a very massive move. Market was trending down. You can see that market was trending down. This is a clear indication that market was trending down. So I know that okay, market was trending down. Then I now switch to my 4 hours time frame. So when I switch to my 4 hour time frame, okay, I see that okay, market was trending down and it was maintaining this trend line. It was maintaining a trend line pattern. A very clear indication that market was in a downtrend, maintaining the downtrend, which is indicated by a lower low, a lower high, 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 a lower high, a lower low, a lower high, a lower low. So this is a clear indication that market was in a downtrend. So we say the indication of a downtrend is indicated by a lower low, lower high, and the previous low, must be lower than the current low must be lower than the previous low. So the previous low is higher than the current low, and the current low is lower than the previous low. So that is how we know that market is in a downtrend. You can see this current low here is lower than the previous one. This one is lower than the previous one. This is lower than the previous one. Then this is lower than the previous one. That is how we know that the trend will still continue. So this is what happened. This is how I was able to spot at this buy. The reversal concept that we trade is market structure shift. So since we said a downtrend is indicated by a lower low, a lower high, what now happen when market take out the last low in the market? It simply means is no longer in a downtrend again. Something has happened. Like for example, now you see market was trending lower low, lower high, a lower low, a lower high, a lower low, and then it take out this last low in the market, this last lower high, it take it out. You see market break above this level, and when market break above this level, it simply means market is about to change direction in an opposite direction. And one thing again that you need to know is whenever market is forming a trend line pattern, it simply means there is a liquidity that has been accumulated at the upside. So market will eventually go and clear this trend line liquidity. So market will eventually clear this trend line liquidity. So when you have that in the back of your mind, when market is trending down, you know that okay, it's trending down in a trend line pattern. It simply means when the market structure shift occurred, market is going to trend until it cleared out this trend line liquidity. So that is so when I see that okay, market structure shift has occurred on a 4-hour time frame, what do? I switch to my 1-hour time frame to look for entry, because you might not see entry on your 4-hour time frame. So what do? I switch to my 1-hour time frame. All right, so this is 1-hour time frame. Now when you come to 1 hour time frame, if you observe very well, since you already know that okay, market structure shift has occurred here, on your 4 hour time frame. So you now begin to check. Now if you look at it on in your 1 hour time frame, you will see that market was trending down, creating a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, and then market structure shift occur in this area. Market structure shift occur in this area. Now when market structure shift occurred in this area, I did not take this straight. I did not take this straight from here. Initially when market structure shift occur in this area, this is where market structure shift occurred. Alright, and then this is a little pullback that is here. This was, let me zoom in so that you can see very well. So market structure shift occurred here, which does not touch the body candlestick. It does not touch the body candlestick here. If you observe very well, market does not touch the body of the candlestick, which means this POI is still valid. Alright, so what are the POIs that we have now? The POIs that we have now is we have about 3 POIs. Alright, so we have this POI here, we have this breaker block, and then we have this other block, and then we have another block here. Alright, so now if you pay attention to the rules of picking a proper point of interest, the first rule say there must be a market structure shift or a double break construction. The second rule says there must be an inducement. The third rule say the point of interest must be unmitigated, and then the fourth rule say choose a point of interest that is closer to inducement. Alright, now you say there must be, first of all you say there must be a market structure shift. Then if you occur here, you see that okay, market break above this lower high in the market, which shows that okay, market structure shift has occurred because market was in a downtrend, and then when market break above this level and then close, this candlestick close, shows that okay, market structure shift has occurred. Alright, shows that market structure shift has occurred. This indicates that market structure shift has occurred. Then we say we wait for inducement. So after this bullish candle that break above this level, you can see that there is a bearish candlestick here that pulled back, which give us our inducement that is here. This is our inducement here. Alright, so this is our inducement, and then you say we should choose the point of interest that is unmitigated. Let me delete this so that I don't get confused. Alright, so that is where the market structure shift, the inducement occurred, and then these are our POI. So we have gotten our market structure shift, we have gotten inducement. Then the third rule say the point of interest must be unmitigated. Then mitigation means when market is creating an inducement, when it touch any POI, means that POI is not valid to be used again. So when market create this inducement with this bearish candlestick here, market did not touch, it's not the wick, when market retreats and touch the wick, it doesn't mean that point of interest is mitigated until it touch the body candle. So when market create this inducement, it does not touch the body of the candlestick, so this point of interest is still valid. and then this point of interest is still valid as well, and then this one is still valid. Then what is the last rules? The last rule says that you should choose the point of interest that is closer to the inducement. So the one that is closer to the inducement is this PY here. Is it PY here? So all right, so we go with so this is the point of interest if I want to trade it based on market structure sheet, because I was not on chart when this happened, so that is why I did not take this trade. So this is how our trade is supposed to be from here. So I was not on chart when this happened. All right, so this is how this trade is supposed to be. So you cover the candlestick that formed this breaker block, and then this is it. Then how do you take your TP? You take profit base. You can target the last high in the market, or you can target how you can clear out this trend line liquidity that was formed. So you can target how to clear out this trend line liquidity, which is a very long trade. All right, you can target how you can clear out this trend line liquidity here, somewhere here. So this is your, so you continue to buy until market clear that trend and liquidity. So you can extend your TP here, and then this trade alone is going to give you one. It's going to give you one. Yes, 1:23 ratio. All right, that's what it's going to give you. 1:23 ratio. This trade alone. All right, but since I wasn't in the market when this happened, when I checked the chart, I discovered that there is a double break of structure that just occurred. This candlestick here, this bullish candlestick here, was able to break. All right, let me clear this stuff. All right, I want my chart to be clean. So market, this candlestick here, this bullish candlestick here, this bullish engulfing candlestick here, was able to break above this last this breaker block here. It break above it, and then he take out this high again. If you check, you take out this high, there is another high here, you break above it, and then there is another high here as well. All right, and then okay, let me forfeit this because this is not valid. All right, so I now see that okay, there's a double breakup, there is a multiple breakup structure here. Market take out this high here, take out this high here, and then take out this high as well. So okay, now I've seen my double breakup structure. The next thing to look out for is inducement. You can see the way I'm analyzing is I'm following it in a sequential order. The first thing that you need to do after you find out your directional bias is market structure shift. After market structure shift, you now check for your liquidity. After liquidity, your point of interest, and then how you can take your profit in the market. And if there is anything you don't understand, you comment it below. I'm going to make a video and explain it, or I will drop my WhatsApp number or my email address so that I can be able to explain well for you. All right. And also, I have students that I'm training. We are growing together as well as a community. All right. So if you want to join us, you can let me know. All right. So this market break above this level here, and then this level and this level as well. So the next thing to look out for is inducement. So this first pullback after this double break construction is where we get our inducement. So this is my inducement here, and then what are the POIs that we have? Now let's mark out the POIs that we have. Now this is the first POI. This is the second POI. There is another POI here, this other block here. But I'm not going to mark it since it's embedded in this one. Then this is another POI here. Alright. So now we have gotten our we are getting our double break construction, and we have gotten inducement. Now what are the rules in picking a proper point of interest? The first rule says there must be a double break construction, there must be an inducement, then you see the point of interest has to be unmitigated. Now this 3 point of interest is unmitigated. Then the third rule say pick the point of interest that is closer to your inducement, and the point of interest that is closer to my inducement is this one here. So that is why I picked this. And the reason why I put my stop loss here is because there is another point of interest here, which simply means in trading you have to build your psychology. If there is another point of interest that is here, and then your point of interest that you are trading with is here, it simply means price is not supposed to get to this second point of interest. That's why I put my stop loss here. Or if not, my supply is supposed to be here, this area here. This is where my supply is supposed to be, so that I can be able to cover this candlestick that causes broker block. So my SA is supposed to be here, and it's going to reduce my risk to reward ratio. So since I know that okay, there's another point of interest here, that is why I put my stop loss here. All right. So this is how I was able to spot this trade. So, and the trade is still running. So when I got another confirmation, when price, my confirmation was when price tick. All right. I got another confirmation, and I was very sure that this trade is going to play out when I see the market break this trend line. All right. You can see market was in a very sweet trend line pattern, in a downtrend. So when market break this trend line, I know that okay, when market break above this trend line, I see that okay, market is about to change direction to an uptrend. And then you can see it came back to retest this breaker block here. So I was very rest assured that this trade is going to play. When market break above this trend line and then come back to retest, and now trigger my point of interest. That is how I was able to cash this trade here. You can see market is trending up. Market is trending up. So if you can see what is currently happening now, you can see that okay, now at this point there is a multiple break construction. Let me say double break construction. It's a multiple break construction. Market break this level here, which is equivalent to this level as well. Market break this level as well, this level here, and then it break another level here. It breaks another level here. And then this is where the inducement occurred. This is where the inducement occurred. So if market is coming down, you should know where you should pick your trade. Alright, so these are multiple break structure. This is inducement, and then these are the POIs. The POIs are almost in the same place. So if you follow the rules in picking a proper point of interest, you see, first of all, say there must be a double break construction. I can rather say there must be a double break construction or multiple break construction. Then there must be an inducement. The point of interest has to be unmitigated. All these points of interest are unmitigated. And then the last will say choose a point of interest that is closer to your inducement. And don't forget, we use two POIs, which is a breaker block and an order block. So you can see that there is also order block here. You can see this bearish candlestick and this bullish candlestick is another point of interest that we have here. So I don't want the video to be too long, so I'm going to pause here. All right, so this is a trade on MetaTrader 5, almost at my TP. All right, so almost at my TP. So this is it on Meta 5. Is very clear here. You can see it's very clear here. All right, so market was in a downtrend, and then take out this last lower high here, then created an inducement, and from here this is a double break construction. This candlestick here break above this high here, and then take out this high as well, created an inducement here, and then my POI that was unmitigated is this POI here, this breaker block here. So that's why I was able to place my order here. And then put my SA here, and then this is the trade. This is trade all the way down here. So time frame don't really matter. If you go to 4-hour time frame, if you analyze very well, you will still have the same POI. All right, okay, let me check. So this is a 4-hour time frame. This 4-hour time frame, you see the market was in a downtrend, and then when market break above this level, created a market structure shift, and then it now continue an uptrend, creating lower low, lower high, lower low, lower high, a lower low, a lower high, a lower low, then lower high, lower low, and showing that market is in a complete uptrend. All right, so if you observe very well now, you see that okay, market break above this level with this candlestick here, market break above this level, and then take out this high again, then create an inducement here. So the POI that is unmitigated, all this POI is unmitigated, this breaker block here, this breaker block here, and this other block, they are unmitigated. So if you follow the rules in picking the proper point of interest correctly, so you choose a point of interest that is closer to the inducement. So the point of interest are closer to inducement is this one. That's why I take this buy here. But my entry was in 1 hour, so it's more clear in 1 hour. So I place my buy here, put my stop loss here. So that trade was in 1 hour, and this is where the trade is now. All right. So that is that for this trade.